Hi guys, I hope all of you are doing well. This is your Nifty Guy. Welcome to today's episode of Decoding Nifty with me. This is the series where we analyze and decode Nifty. We basically do a postmortem of Nifty every day post the markets so that we have a clear and concise plan for trading for next day. And what having a plan means is if you have a trade plan which you have ready with you and market acts according to that, you enter the trade, you have the odds work in favor of you and you make a winning. In case if it does not, you end up not actually trading senselessly or without a trading plan and actually take losses. So having a plan safeguards you from unnecessary losses while also capitalizing on the most probable moves that the market can give, and you are already ready with the plan. And in case if you guys like the way I put out the daily Nifty trade plans along with the price action concepts and setups that I personally use, please do not forget to like the video, subscribe to the channel, share it with your trading friends and community, as well as put down anything that you might have to say in the comments box. On that note, let's kick with today's video. And we'll start with what we had planned for today versus what happened in the market. And and then we'll come to the second part of the video, which is we'll plan for Monday, right? So today markets actually opened with a gap down. Now, we were already short below this. So yesterday, our plan was to create a long above this and a short below this. Now, market opened with a gap down and went up, gave a pullback, tried to go up, created a higher high, but went back below this swing, right? Now, this was your alert candle. Okay. I entered the trade around here. The reason being, number one, we wait for a pullback. Number two, for anybody who has been watching my channel for quite some time would have been known that this particular zone has been there on my chart since around, yeah, since around 26th of June. And I had clearly mentioned that whenever, so there would be a lot of time when the price or the market is much higher above, but I had created this around here that whenever we are going down below this, we'll look for a short entry again with a pullback, right? Markets were far away from this zone, but still I was making that marking on the trade plan. For trade plan of today, I wanted to keep it simple. Honestly, I was not expecting another trending move like today's. I was expecting a complete sideways price action today, but market gave us a surprise. But nonetheless, we were prepared. So anybody who would have been a part of my journey so far and who would have been following my videos would have known that I had clearly mentioned that, and I used to clearly mention it is not going to come to the next day. But whenever it comes, we know that this is the level that we need to look for, and especially when markets opened with a gap down, tried to fill the gap, could not fill the gap. Now I have spoken multiple times about pivot explosion gap as well. So that is something when market tries to fill up a gap but does not fill the gap completely, it goes in the opposite direction in with a good momentum. Plus, we got a closing below the low which we had clearly spoken about in earlier videos, below which we were extremely short. We got a double top. We were below this. We got a pullback. This is where I entered the short position, and as you can see, this is the very good move that I captured. Now, this particular candle did upset me, but I held on to my position around here only because I was expecting some volatility. And had it closed around the highs, I would have exited. But it did not close around highs, close around the mid, then again created some volatility, went into sideways price action, gave me and I exited on this particular candle. Again, the reason of exit is RSI divergence. As you can see, markets created a new low, RSI created a new high. This was the RSI divergence. Once I spotted this, I exited around here with decent gains. Right? Post this, the markets were non-tradable, as in there was no clear structure or anything to be done. In the markets, no fresh shorts could have been initiated because, as I say, you have to look where the market has come from, and the market has already traveled a lot of distance. And if you would have missed this particular part, entering into fresh shorts around here would only invite trouble for you. So that was the reason. Again, you can see the kind of volatility around here. Look at the VIX from the higher end. That is simply denoting selling pressure. But just simply look at the price action around here, right? And again, as you can see, there were a lot of positive divergences around here. But again, I it did not make sense for me to enter into any long trades until unless the price action confirmed and there was no change in the structure. So see, this was the high. Then this was the lower high. This was the third lower high. So the structure did not change, right? So there were no further trades which were taken except for this particular beautiful trade on the short side. Now, this is what I call as a confluence trading, right? For today, we were planning that we'll be short below this. For many days, we had been planning that if market comes below this, we are absolutely short because this was our fib level on 75 minutes. I'll once again revisit the drawing board and show you why with this level was there on our chart and why was this level of so much of importance. And we got a closing below this level. We got the sweet pullback that we wanted. We got the explosion pivot gap. Markets trying to fill the gap, not able to fill the gap with a higher high, right? Now, this higher high makes the deal even more sweeter. The reason when it went up above this particular high after this pullback, there would have been many people who would have tried to enter longs around here, and this break of this low or break of this low would have triggered so many stop losses, right? There would have been people who would have longed the markets around here. So this, all this is the chain reaction which we got to see here. And trades like this wherein you are already planned, right? See, this is the level which has been there on my chart since long. And the reason why I kept on extending it is because there is some importance to this level. And this is the result of us being actually planned in the markets, right? Even though I did not enter a trade or with the full quantities because and only because I was expecting a sideways day, I was not expecting a trending day. But nonetheless, profit is always profit. In the quantities were less, but the premium captured in option were good enough, much more than what I usually do with my scalping trades. So this was a good trade which we did today. Now I'll just quickly show you the 75 minutes time frame and why this particular zone was of importance to us. So this is the fib level of this entire up move which was there. This was the point 0.5, this was the 0.618. We drew a box. And as you can see, the importance of this level once the market came down around here, this is exactly where the market took its support from, right to give us a rally on the upside, failed, and then again we are down back below this, right? So this was the reason why I said that above this we will look at buying opportunities around here, below this we'll look for a trade on the short side. So this is what exactly planning a trade helps you. Uh, so I hope uh, the levels or exactly how we had planned the trades are clear for you guys. We would no longer be needing this. Zone has done its duty. It has been us for so many days, lying silently and waiting for us to give us an alert so that we can take a trade. And now that its duty is done, we'll be deleting this. We'll be deleting this. We will be deleting this. Now, for Monday, we'll start with the weekly time frame first, right? So we have completed a trading week around here. And if we see again on a weekly time frame, this was the high which was created. Market has created a new low. Again, we have created a lower high. This high was not breached. Now, it does not mean that we are going back below these levels. Markets can, I'm just trying to explain how it all works. Markets can come down, create another lower high, create another higher high, which will be higher this than this high, create another high, and then eventually maybe break this particular high. So even that will be a valid trade on the upper side, but that is something that we need to look for and trade whenever that comes. So that does not mean that, okay, we are going in for a double top and you are extremely short on the market. Absolutely not. The reason why, even while we are looking at extreme bullish positions, I always give you the trades on the short side as well, because the number one rule of trading says anything can happen in the markets. Nobody can predict accurately, or nobody can predict anything at all. So if there are people who are predicting anything on YouTube or on other social media channels that this is what is going to happen in the market, my request would be to block them out. There may be many astro guys doing wave analysis, whatnot. So who would be predicting it? This is what is exactly going to happen. All that is fluke, and none of that is actually ever going to happen. And they will only keep out come out of their well once what they have said something goes in their favor, or else they will keep silent. So my suggestion would be to keep please block them. Do not go or take any trades based on those advices. Do not even take any trades based on my advices. I actually don't even advise. I only simply plan, and I try to plan out all the possible scenarios that can happen. And that is simply because of my experience in the market that is there, and my first and single focus, or the first relevance, is the price action and what is happening in the market. I try to talk to the markets, and that is what I suggest all my followers to do, right? So in, say, for example, today's price action, again, it was very, very beautiful, right? Markets opened with a gap down, tried to fill the gap, failed, again tried, again failed, came back below a particular level of significance, and that is when we entered the short positions. But on a weekly time frame, again, what happens is what we will see once we arrive at those key levels. On a daily time frame, we have given a breakdown of a double top. So what I had also mentioned in yesterday's video, this red line around here below which we were short was the neckline of the double top. We created a high around here, tried to create a new high, but we created a lower high. And now we have also created a lower low. The negative price action that had formed yesterday, today we have got a follow through of the same, right? So follow throughs always matter. So right now, are we extremely bearish? No, but we will be looking at trades on the bearish side. Like I had said, we will be trading with caution on the short side. Now I will say the opposite. We will be trading at trades on the long side, but with caution. And what we can do is we'll mark out key levels, right? Say, for example, market is falling. What are the support levels that we can expect in this falling market, right? Our friend Fib will come in handy around here. If we are to connect the entire up move, right? So this is the bigger zone, the 0.5 to 0.618 of the bigger zone, right? If we are to use this particular, so markets went up, gave us a swing. If we are to connect this particular swing, then we are already in the zero point 0.5 to 0.618 zone, right? I will daily fib support. I'll just simply, because so that we don't forget it in the future, 19th June, from 19th June low, and yeah, so this will beat for it, and this is the daily fib level support from the 13th June, right? So yeah, 13th June low, daily fib support from 13th June low. I'm simply marking or writing this text here around because these are multiple fib levels that I have around here, and that is so that we don't get confused once we are there. I am putting out these on a 75. Now let us go down to a further down, and again I will be putting up a fib level for the retracement as well. So we'll take this high and this low, and we'll mark this. And for the sake of our remembrance, just a second, guys, just give me one moment. I'll be adding the text around here. This is daily fib resistance. Perfect. I hope this is all making sense. These are not random levels that we are drawing on our charts, right? Now, if we go on a lower time frame, this is where we'll start the planning for Monday. Okay, cool. So as you can see, we are already in the one important key support level which can be there. So this is the daily from the daily support from 19th June low, right? So we have to observe the key price action around this level. Now, one trade which I always suggest is mark the low. One clear, simple trade is we are short below this, but because we are around major important support levels, we'll keep a close eye on the price action and we'll be trading with caution. But there's one particular trade that I always suggest. once we have a trending day, sorry, a trending day like this, and we close near the lows. Today's video might be long, but please be with me. There are a lot of key takeaways around here, right? We need a good bearish candle closing below this particular low, right? What will this mean? People who would have missed today's rally, people who would have missed out on the entire thing, or people who would have been holding overnight puts or call shorts. If this is a bearish candle, this will invite fresh new sellers around here. And once the high of this particular candle gets taken out, we can expect a trade on the upside. Now, this particular trade is only relevant at the start of the day, right? And a lot of it will also depend on the opening. If we This is most relevant if we open flat or minor gap up or minor gap down, and then eventually we break down below this particular low with a bearish candle, right? The key important thing around here is the candle should be bearish, right? It can be a bearish pin bar, it can be a bearish Marubozu, it can be any candle, but it has to be a bearish candle. And then the high of that candle needs to be taken out. And that is where we can plan a long trade. And if we are planning a long trade around these levels, this is the level where we will look at exiting the trades. And that is where another plan of action comes in. This is the level where we will plan a short trade, right? So this is the 0.5 to 0.618 zone of the entire fall from top. And this is where we can plan a short trade on the for the downside. Once we are back above this, just like we've had that key level around here, this is for now, this is valid till the time no new low is breached. We will be having this level, or we'll be uh, revising this particular or resetting this level every day in our daily analysis. But above this zone, we will be looking at a long entry. Now, this is a fib level from the daily time period perspective. Do we have any other fib level on a shorter time period also? Okay, this is also coinciding because this was the high which was made with the on the 75 minutes time frame. Also, I think we are cool with these levels just. We do not need any more fresh levels. Again, these support levels are which where we can look at buying activities in case if we see some positive price action around here. Otherwise, the nope, but the kind of pressure that we are looking at on higher time frames, this looks a bit difficult, but we can look at some pullbacks around here. See, markets are oversold, although I don't use RSI as a oversold or overbought indicator, but nonetheless, we can look at some kind of retracements, and maybe this could be a good trap trading setup for Monday, wherein market gives us a closing below this, forms a bearish candle. Once the high of that candle is taken out, only and only if all these conditions are met, we will be entering into this particular trade. Otherwise, we will be ignoring this particular setup and will focus on creating a short entry around here. Say, for example, there are some positive news around the weekend. We open with a gap up, we reach around these highs. In case of a negative price action around here, we can look for a shorting entry around here. This right now looks like a far-fetched dream. Definitely not for Monday, but never say never. Markets can surprise us. So we will be, as I say, do not predict anything, but be prepared for anything. And that is the reason why I have all these levels and I am preparing when this is the bigger level. Simply because this is there on our chart for the first time, we can look at a sorting entry below this around these levels. Now, not necessarily just inside this. This can be here, this can be here, this can be anywhere around it. Not necessarily tomorrow only, but whenever ultimately we are coming here, because this is the 0.5 to 0.6 of the entire up move, right? So this will be a good level of support. This will offer some good level of support around it. We can look at some positive price action around these levels as well. Do not get confused with so many price ideas because all these are relevant on where we open and how price is behaving around these levels. I am just about giving you a rough idea, but the basic focus has to be on the price action. Look at the market structure. In case if you have no clear idea about market structure, you can go to the playlist about the trading, mastering trading and psychology series where I have a video on mastering the market structure or how I read out the charts. You can go and have a look at that. There are other videos, part on psychology, on RSI, on stop loss. So you can go and watch those videos. It will definitely be adding some value to your trading. So yeah, I think that's it from my side for today. I hope you guys have a good weekend, and I will see you guys again on Monday post the market. This is your Nifty Guy signing off for today. Thanks and cheers. Thank you so much.